In this module, we are going to discuss unpredictability and the need to perform or the requirement to perform unpredictable procedures in every audit. And as always, we want to be efficient and effective, follow professional standards, and document what we have done properly. Now, is it a good idea to do the audit the same way every year? Probably not. It might be, as we think about it, there's a more efficient, a better way to do it. The thing is, we have to do planning every year, think about what we want to do. And the client changes a bit every year. Materiality changes a bit every year. And we might just change things. It might just be a better, different way of doing things. Though, in a smaller, mostly substantive audit, there might be a limited opportunity to do that. There's sort of one and only one way to do the audit. Should we tell the client in detail how the audit is done? Probably not. There is a requirement to describe what we're doing to the audit committee and the board. We might cover that in the engagement letter, and we might just say our audit will be done in accordance with generally accepted auditing standards and include such procedures as we considered necessary. And we might decide that that's enough. We're not going to go into the detail of how we audit each section because we don't want the client to know. What do standards say? Do standards say it's required to do unpredictable procedures every year? And there are two sections, 330 and 240. Let's talk about 330 first. 330 paragraph 5 talks about overall responses to risk of material misstatement at the financial statement level. Do we have to document that? Yes, 330.28a says yes. And there are 7 suggestions in A1, which says may, which means we don't have to do all 7. We could do 1 or 2. And we don't necessarily have to do any of the 7. There could be some other overall response not listed in paragraph A1 that we will do. That's fine. 330A1 includes a number of suggestions of things that we might do, which means the same as we might not do. Though when I look at these suggestions, I kind of say, I think these are things I would always want to do. So emphasize the need for professional skepticism. Kind of always want to do that. Have a checklist prompt. I emphasize the need for professional skepticism. Assign appropriate staff. Presumably you're never going to assign inappropriate staff. So I think I want to always assign appropriate staff and document that I did so. Have a prompt. I did. Change the nature, timing, and extent of supervision. Do so. Perhaps risk of material misstatement changes and we wish to increase the amount of supervision. Perhaps the staff is a little more junior this year than last year, so we might want to increase the nature, timing, and extent of supervision. So have a checklist prompt to remind yourself and do so. And it depends on the staff level and the complexity of this year's audit. Do so. Incorporating additional elements of unpredictability. Said before, I think we always want to do that, so do so. Have a checklist prompt. I incorporated to the extent possible additional elements of unpredictability, which I think you always want to do. Change materiality, probably always going to change materiality. Client gets a bit bigger or a bit smaller, materiality will change. Change control and substantive testing, again, maybe that's something you'd always want to think about doing. There's a better way, a different way. So a prompt, I thought about it and did it. So think about it and do it and document it. And let us read the words that standard setters used very carefully. Incorporating additional elements of unpredictability. Elements means some, not being entirely unpredictable, not having unpredictability, doing the audit normally and having unpredictability procedures at the end. That's not what it says. It implies that there are always, should always be elements of unpredictability, and says you might or might not incorporate some additional ones. So they're saying two things. They're saying unpredictability is good and we should always be unpredictable. Does 330.28a require documentation of unpredictability? No, it does not. It requires documentation of the overall response, which might include unpredictability or might not, and it is only an element of unpredictability, a tiny wee bit of unpredictability that needs to be included and possibly documented. So it's not required documentation. On the other hand, how hard is it to include a documentation prompt in which you say, I included elements of unpredictability, tick, initial date? That's easy. And indeed, as you're considering documenting your overall response, A1 has some cool suggestions. Don't have to do them all. Could choose to do them all. Or you could just say 3 or 4 of the bits of A1. I supervised staff. I was unpredictable. I did all those things. Simple response. It's documented. And someone who says, hey, did you include an element of unpredictability? Why, yes, I did. Documented it right there. If someone is looking at your file and trying to determine if you included an element of unpredictability, and they love documentation, will they like it that you have a checklist prompt that says, I was unpredictable? And yes, they will. Now, should they want that checklist prompt? No. They should be able to go through the file this year and last year and note that materiality has changed this year over last year. And that is an element of overall response, and therefore you've done that. Or they should compare this year's testing to last year's testing, observe that it's different in some ways, observe that you assigned appropriate staff. Doesn't have to be documented, but a lover of documentation who's trying to quickly determine whether or not you've documented an overall response correctly, they will love that. So it's a good prompt for you, and it also helps people that love documentation as, oh, that's documented. Very good. 240.43. Unpredictability in the selection of audit procedures. I'm going to read this. In determining responses to assess risk of material misstatement due to fraud, the auditor shall incorporate an element of unpredictability in the selection of the nature, timing, and extent of audit procedures, and it refers to 2 paragraphs. I'm not exactly sure what that paragraph means. Maybe it means that if the risk of material misstatement or fraudulent financial reporting is low, that only unpredictability is needed. I don't think that can be possible. 240 says that any risk of material misstatement or fraudulent financial reporting is significant, which is higher than high. So unpredictability is not enough. Maybe what they're trying to do is give a hint about unpredictability and saying it's just always a good idea. And I agree, it's just always a good idea. Both 315 and 240 are risk-based. We care about material misstatement, either fraud or error. We really don't care whether the material misstatement is caused by fraud or error. Other than if it's caused by fraud, we may not find it. It's very difficult and gets progressively more difficult to find if it's at senior management and concealed with collusion. Very difficult to find. We're interested in fraudulent financial reporting. In other words, the financial statements are wrong because of fraud. Stealing pencils from the supply room is defined as fraud, but it's not fraudulent financial reporting. The financial statements are not materially misstated, and the auditor doesn't care about that kind of fraud. Now, both 315 and 240 say you do planning to assess the risk of material misstatement. You'd probably start out with analytical procedures, which are very effective, a very effective way to identify risk of material misstatement, probably not a good way to detect risk of material misstatement. We do risk assessment procedures. Maybe those procedures include looking at internal control. We assess risk of material misstatement. We have to document the rationale. We have to say why we think it's moderate or high. If it's low, it's because we can't think of anything. And we do procedures in response. Now, random procedures not directed at risk of material misstatement are not that helpful and not required by either 315 or 240. To be clear, this section of 240 only applies if we have assessed a risk of material misstatement of fraud. If we haven't, then we're not doing any procedures. And anyway, all that is required is an element of unpredictability, not a bunch of random unpredictable procedures. And certainly not every procedure is unpredictable. If we have identified a risk of material misstatement of fraud, fraudulent financial reporting, there's probably a whole series of new and very specific procedures that will be required to address it. Unpredictability alone, not enough. Does this section in 240 contain a requirement to document the unpredictable procedures we did? Well, there's no specific requirement, though. As we're dealing with fraud, I think we have to be very careful to document what we think about fraud and what we've done about fraud. We're very unlikely to find fraud. Section's very clear about that. So we need to therefore be very careful to document that we tried. And if the section says try these 10 things, we should document that we tried all 10 of them. So documentation is, to some extent, is all that could be done. So very important about fraud to have a checklist that has a series of prompts that prompts you to do the things required in 240. Standard setters go on in A127 to make it clear that the element of unpredictability is a matter of professional judgment. And if you didn't know what procedures might be done for fraud, they have a long list in Appendix 2 if you didn't know what to do. They provide a further explanation in the basis for conclusions, and I didn't understand this from just reading the section. So the basis for conclusions was very helpful. And it says under the current section 240, because I'm now talking about the new one that came in 2025, effective sometime in 2027. Determining an effective unpredictable procedure could be challenging if taking a fully substantive approach. Okay, good, I get that, I agree. The revised requirement allows for greater use of professional judgment, including the extent to which unpredictability is applied. Expands the list of examples of unpredictable procedures to support implementation of the requirement. And I have to admit that was not clear to me until I read the basis for conclusions. So once you read that, the amount of unpredictability is up to professional judgment, and what you do is up to professional judgment, and they've given some examples. To again go over 240-43, F and only F, you have assessed risks of material misstatement due to fraud, then you are required to incorporate an element of unpredictability, which I think you should probably want to do anyway, but that's the only requirement. And you have to document the risk of material misstatement, and you have to document how you plan to address it. Then we look at A126. I'm not entirely sure that this is properly placed in the fraud section because I think this is generic good advice. Unpredictability is always a good idea, of course. Now, this is a procedural, not risk-based suggestion that procedurally we should toss some unpredictability in. And the last sentence talks about fraud, and we should keep an open mind about procedures for fraud. So clearly, unpredictability is not enough. But do I agree that unpredictability, doing things unpredictable, is a good idea? Of course it is. Now, they provide a list of examples. These are examples. These are things that are not required to be done. You might do them. I'm not going to go through them in detail on this slide, but I will go through each suggestion on the next slides. Now, the other thing about A126 is it sounds as if every year we assess a risk of material misstatement for fraud. And last year we looked for it, but we didn't look terribly hard and we didn't find it. And these two paragraphs suggest that, okay, next year you might try something different. You might try a better procedure. I don't think that's what was intended, but that's kind of what it sounds like. The first suggestion, F, we're looking for a material risk of material misstatement due to fraud, fraudulent financial reporting. It suggests looking at immaterial transactions. I'm not sure that works. Some people say, let me go reconcile petty cash. That's immaterial. Maybe I'll find fraud. And no, you won't. That doesn't work. Maybe this might be an idea that works in some circumstances that I don't understand. I don't think that's a particularly helpful suggestion. The second suggestion suggests that last year we were looking for material fraudulent financial reporting, but we only did broad analytical procedures. I don't think that works. And it says if you did that this year, we might do tests of detail. Now, doing analytical procedures looking for fraud, now initially identifying it, but uh, determining what it is, how much it is, analytical procedures aren't going to do it for you. Of course, tests of details were needed, and I don't quite understand what standard setters think we were doing last year. Though maybe what they mean is every once in a while switch from doing an analytical procedure to a test of detail. You might trip over fraud. Don't disagree. Adjusting the timing of audit procedures from that otherwise expected. I think now we're just getting into generic advice. That's always a good idea, always should be done. And I don't know how we would know what procedures the client was expecting us to do for fraud, and that doesn't particularly seem to be a fraud procedure. But would I agree that routinely we should adjust the timing of audit procedures? Sure, we should. Number 4, using different sampling methods. Not a bad idea to switch things up in the audit. It's not a fraud test, but it's something that again might help you trip over fraud, but not a bad idea. Should we do that? That's a good idea. Performing audit procedures at different locations or at locations on an unannounced basis. Always. That's something that every audit senior I know has always done. Planning the inventory count, we're going to go someplace different this year. And we might even go to a smaller, not that material location to count inventory. If we suspect fraud, if we suspect fraud in the London location, we're not going to go to Windsor, we're going to go to London. So go where the fraud is suspected. But as a general procedure, we're doing sampling, we're not visiting every location. Visit different locations every year? Of course we should. Doing substantive analytical procedures at a more detailed level? Always a good idea. Analytical procedures are very good at indicating material misstatement. Won't tell you how much it is, but they're a good way to find out where we need to do more procedures. Won't determine fraud, but will help us target further audit procedures. So I don't disagree, but it's not necessarily something that'll help us find fraud. Seventh suggestion, using automated tools and techniques, sure. So I'm not sure what they intended putting this in the fraud section, though if this were in 315, I wouldn't disagree. And these are things that, as I said, I think most seniors automatically did when planning the audit. Let's just do it a little differently from last year. Now, these are examples. You don't have to do all of them or any of them. And I don't think any of these will help us find fraud, but they may cause us to trip over fraudulent financial reporting. So I agree, we should think about doing all these things. And as I said, most audit seniors I've ever met automatically did this, and they should have. Now, should we be doing our audit to just document unpredictability? So to do that, we have one change from last year, and that documents that we were unpredictable. Now, I don't think we should be doing it that way, but does that document unpredictability? Yes, it does. It documents an element of unpredictability. Now, as I say at the bottom of the slide, I think unpredictability should be automatic. Now, will lovers of documentation buy that? That last year and this year materiality changed? Maybe not. They tend to love documentation. They should. 230A7 says you don't have to document everything, and some things should be obvious from the file. And you would be able to say, well, look, last year documentation and or materiality documented in last year's file was this, and this year was a different number. So that's an element of unpredictability. But as I've said several times, I don't think it's possible to do an audit entirely the same way as last year. And we should just automatically be mixing things up a bit. Now, I'm a fan of documentation prompts because I can't remember everything and I like to be prompted and reminded. So when planning an audit, I like to have some prompts that say, hey, did we do this? Did we change this? Did we think about materiality from last year? I like all that. Now, there's documentation that you were unpredictable. I document I was unpredictable. If it's only documentation, it probably doesn't work. Will lovers of documentation buy it? Of course they will. If you have a checklist step, I was unpredictable, they go, oh, good, you were. Now, I think you should do and document unpredictability. And I like to have file prompts saying, hey, think about this. Think about doing it differently this year. Think about visiting different locations from last year. It's a good idea, something we should do. Just do it. You will see some people saying that you should include unpredictability procedures, whatever that means, in an audit. You just randomly do some procedure on some balance where you have no thought of risk of material misstatement and you just toss that into the audit randomly. That is not required. It's not in standards. It's probably a waste of time. Randomly testing immaterial balances, probably a waste of time. I guess it produces documentation that lovers of documentation like, but it's not going to make your audit any more likely to find risk of material misstatement. Randomly visiting immaterial locations for no particularly good reason, also a waste of time. Now, I think what standard setters mean, and I think what they say in A126, which actually I would prefer to be in 315, is they're trying to say, look, deliberately structure the audit differently each year. Do it in an unpredictable way. And there's this theory that clients somehow know exactly how you're going to do the audit. I don't think that's true, though after a while, if you do it the same way each year, and the controller used to do audits, they will be able to figure out what you're doing. So deliberately structure the audit differently each year. Have a plan and have a reason. Think about risk of material misstatement and thoughtfully test smaller items. So you say, this is not a very large location where they have inventory. We haven't gone there in a long time. Let's include that location. It's not a material location, but let's include it. And if you're planning testing of transactions, don't just test material transactions. You have to include random. The tests you include have to be random, and so every once in a while you're going to hit a small item. Um, that's fine. Test that. You need to thoughtfully do the audit and thoughtfully and deliberately structure it differently each year, which, as I said before, most audit seniors that I know just automatically did that. Let's do it a bit different next year. And I think that's what unpredictability means. It is only an element of unpredictability, and nowhere are unpredictability procedures required. Now, I see a lot of people interpreting the two sections of standards that I've referred to as saying that unpredictability is required. Is it required in a normal audit? No, it is not required. It is one of several possible procedures. You don't have to do it. You don't have to document it, but it's a really good idea. Is documentation of unpredictability required? No, it is not, unless it's part of the overall response. And then all you would need to do is say, as part of my overall response, I was unpredictable. Having a documentation prompt to remind yourself of that and other things, also a really good idea, but it's not required. It's a really good idea, but not required. Is unpredictability required if we've assessed a risk of material misstatement due to fraud? Yes, but far more than unpredictability will be needed to deal with it. And is documentation required? Yes, 24068F says you got to document what you thought and what you're doing. And if you suspect that documentation is important about what you've done and the procedures you're going to have to pick are important because you may still miss it. It may be carefully concealed with collusion and you're going to miss it. So documenting what you thought, documenting what you did, very important. So thanks for listening.